here. And Megan, this has been a very interesting company to watch this story develop with you and your colleagues at LikeFolio over the past years. Is the story and the focus still on Disney Plus, or is it, to Evelyn's point, somewhat on this pent up demand around the parks?
I think that both points are really valid, especially heading into this earnings. You do have this hope and this optimism about the vaccine and about the ability to return to travel. So if Disney can make positive comments toward this, toward people, or toward actually capturing some of that pent up demand, obviously that's great news for the company. But where we really have insight is their streaming business. We're listening to a lot of different streamers: Netflix, HBO Max, Peacock, and Disney Plus, and we see Disney Plus really starting to ramp up this quarter. And so whenever you look at, typically we're coming to you guys, we're talking about new subscriptions, but that's a really tough year over year comparison, because obviously last year during this quarter is when they launched the service. So obviously this massive onboarding, that's going to be really hard to maintain that pace of growth, right? And so what we did is we looked at the renewal mentions. And so when we listened to those people who are talking about actually renewing this Disney Plus subscription, those increased about 46% in the last quarter. And so that's a really positive sign. And then we tried to understand, okay, why are people deciding that they're starting to renew now? Why is there this acceleration in this quarter? And a lot of it had to do with content. I don't think that this is any surprise. We talk about it all the time with Netflix, that content is king. And so Disney has started really churning out these new content names, and that's helping to kind of shift the trajectory. If you can kind of see on this chart here that, people are renewing their subscriptions. And I think that that's a really positive indicator of churn that Disney might report on this quarter. And so this chart, this is the content specific mentions that we're looking at. So when people are talking about renewing, what is the thing that's pushed them over the edge? And you can see, obviously The Mandalorian, extremely successful, the Star Wars series, but you also have other things like the new Soul movie, the Mulan movie. And so I think that as Disney continues to, beef up its content library, which was pretty good to begin with, this is what's really keeping those subscribers around. And that's something that we need to watch moving forward.
Megan, this might show my age.
Go ahead, Kevin.
Or the fact that some of my children are older, but there's so many. What's WandaVision? I'm looking at some of these names and I don't recognize them. I know Taylor Swift, I know Simpsons, I know Mandalorian, I know Marvel, I know Star Wars. I think I'm showing my age here right in front of you, Megan, by saying there's some of these names I have no idea what they are. WandaVision, that one is. I want to find out what WandaVision is. But Megan, my question to you is this going to be enough? Are these numbers big enough? Remember, there's so much expectations built into these numbers. Are this 46% quarter over quarter numbers? Are the breakdown of the the mentions? Is this stock going to remain popular enough in terms of what they're doing to get reopened? Because how does LikeFolio feel about what the stock has done? Because clearly we've seen this during this earnings release where great news, great run up, come out with great earnings, and the stock sells off. What is LikeFolio feeling about Disney's direction post earnings?
Obviously, with the recent run, even in the past couple of months, expectations are extremely high. And so far in the last few earnings, at least from a streaming perspective, I think Disney has exceeded what these expectations are. So obviously, they're expected to continue to perform at this incredible pace. So what we can do is we can look at a couple of different points in the data. First, it's really positive that we see people who are actually talking about renewing. Second, it's really positive that we see cancellation mentions down. When we look at those cancellation mentions are down about 35% year over year. So those two metrics that we're tracking align. So we really like to see that. Another thing that we can look at is consumer happiness. When we look at happiness across Disney, across Netflix, even across Disney's other brands, Hulu and ESPN Plus, Disney Plus is the top of the pack. I think the mentions of that are about 79% positive, followed, by Netflix. It's 4 points higher than Netflix. So, that's a good indicator that Disney is able to keep its streamers and its subscribers happy. And I think that the final piece is, we talk about Disney Plus a lot, but let's also consider Hulu, that live TV, and ESPN, that bundle action that we track. So, consumers can sign on for all three. And we see those bundle mentions increasing about 54% in the last quarter. And so they just announced, I think, that you can get all three of those, the basic level, for about $12.99 a month. So, Disney's definitely presenting consumers with a lot of different options. And what we can say is that, if consumers are talking about cutting a subscription, we don't think that it's going to be Disney Plus, at least not yet. And so I think that is definitely, positive momentum. But what we can't quantify is, what are those impacts from park closures? And then also we can't understand, what has Disney done to tighten its belt? The internal decisions that the company has made, that's something that our data isn't going to quantify. But at least from a streaming perspective, Disney seems to be on a really positive path.
Yeah, and Megan, we've long said that bundle is kind of the closest, easiest, I guess, traditional cable alternative for families. Disney Plus, ESPN Plus, and Hulu kind of gives you something for everybody in the home. So that's, of course, going to be an interesting thing to watch develop. But my final question here is on the longer term. I thought it was very interesting, that content breakdown. You don't have a clear, really, winner. It's a very kind of diversified interest across so many different brands. And in a world that's so, hyper focused on something for such a short amount of time, then we're on to the next thing. Is that a positive that they don't necessarily have that giant viral Tiger King type of documentary? Or is it actually a positive that they have so many different things that you're maybe partially interested in, that if once that thing kind of falls to the wayside, it's not the entire business?
Yeah, I think that you hit on a really important point, because whenever we used to talk to you guys about Disney Plus, we were looking at these cancellation mentions, and it was because people watched The Mandalorian and then said, okay, well, what else now? If you don't have kids, there wasn't a lot of other options that you could stream through. And so what we're seeing in this last quarter is it's a lot more diverse. Like, obviously the new, the new season of The Mandalorian was really popular, but you have these other names creeping in, and these other, content drivers that Disney can kind of latch onto to keep these consumers around, because that's what they want. They want that recurring revenue, and they want to continue growing this pot of streamers. So I think that this is key for them moving forward. So, that's something that we're watching for, this consumer happiness. Are consumers happy with the content that they're pumping out, and are they continuing to subscribe? And so far, it looks like they made some improvements in the last quarter, and that's definitely, going in the right direction for Disney.